Hello and welcome to the second video blog in our series, A Dummy's Guide to Smart Beta, here on Sensible Investing TV. Now, last time we explained how Smart Beta is neither a passive investing strategy nor an active one. It aims to capture market returns, but in supposedly smart ways. Whereas index funds are typically based on market capitalisation, Smart Beta funds reflect other factors or fundamentals, for example, the size of a company or how much it returns to its shareholders in dividends. So what do the so-called experts make of Smart Beta? Well, it's fair to say that opinion is very much divided. Someone who doesn't like the idea at all is Charles Ellis, a proponent of traditional index funds.
On many of these amazing discoveries, it's torturing the data that creates the discovery at about the time when it's most likely to be proven, quote unquote proven, and most likely to no longer be valid. So I'd be very, very skeptical of Smart Beta, or Beta, whichever way you want to say it.
Like Charles Ellis, the world's biggest fund manager, Vanguard, favours the cap-weighted index. It too is wary of Smart Beta.
There's a danger that Smart Beta is active relabeled. Our belief behind the market cap weighting as being the starting point of your decision is based upon the fact that market cap weighting represents the consensus view of the market. And the wisdom of that crowd is such that whilst they may get that average wrong sometimes, most of the time they'll be getting that right. So to come away from the market cap weighting means that you're having to take an active decision to weight your decision in some other form. If you have high conviction in a certain area of the market, perhaps to do with yields or regions or whatever it might be, that's fine. But you need to understand what that conviction is, what's supporting that conviction, and just equally understand that that could turn out to be right or wrong.
Smart Beta, I think, has got two strands to it, one of which we're very strongly in favour of, the other we're a little bit more sceptical, although we're not completely against it. So what we're really in favour of is the idea that investors should be able to use low-cost building blocks to build up their portfolio. Where I think we're slightly more sceptical on Smart Beta is really the idea that it's smart, that it's something new and different. Often a lot of these Smart Beta offerings are simply factor bets, regional bets on a particular view.
Rather more sympathetic to Smart Beta is Dimensional Fund Advisors. It doesn't like applying the term to its own philosophy, preferring the phrase scientific investing instead. But Dimensional does believe Smart Beta strategies have a key part to play.
It's taking advantage of all of the risk dimensions that the capital market has to offer. And beta is just the reward you would expect, what you can capture, not by outguessing the markets, but by accessing whatever the markets have to offer. I think it's a pretty good description of what financial economists around the world have tried to do over the last 40 to 50 years, identify what are the risk factors or dimensions of expected returns in the capital markets, where can investors expect to earn a reward, where they cannot expect to earn a reward. But the whole world of things like alternative investments and hedge funds and things of that nature, oftentimes what these sometimes complicated strategies are really doing is providing access to different flavors of beta and charging a lot of money for it.
Interest in Smart Beta is certainly growing. You can see from this Google Trends graph, for example, that although the popularity of Smart Beta as a search term has fluctuated quite a lot over the past 12 months, there are far more people interested in it now than there ever were. Several fund managers are reporting more people investing in Smart Beta funds, and studies such as this one show that trend continuing over the next few years. Next time, we'll meet two men who really do think that Smart Beta represents the future of investing. In the meantime, do share these videos with others if you're finding them interesting. Thank you for watching.